Okay, folks, welcome back. This is the weekend edition of the ICT Mentorship Commentary for week ending November 8th, 2020. So, we are on the other side of the U.S. election. I have done my best to communicate my views on it at this point, and I made those available publicly on my YouTube channel on the community tab. So, if you have not gone to the YouTube channel, click on my YouTube channel, then go to the community tab, and you'll see it's a rather wordy opinion. Okay, so I did that so that way everyone outside of mentorship could stop emailing me, because for weeks and months ahead of the election they were asking me to talk about it, and I'm not going to put it in video because YouTube will just take the video down, and they may actually take offense to me putting my views even on my community tab. But I'd rather them censor my community tab than attack my YouTube channel, well, at least the videos. So I felt it was better to have everyone, both mentorship, you all here, and those that are in free level education, to at least have my opinion about what it is that I see coming, what scenarios may pan out. And I didn't want to fill the video out with all of the other things I mentioned, but that was how I see it. It doesn't mean I'm right. It just means that that's my stance on it all. Okay. So, this is the economic calendar for the week to come. On Monday, we have medium impact during London session for Euro, and just past the London session open. And then we have a high impact speaker for GBP. Tuesday, really an absence of anything coming out that's noteworthy. Euro, Canadian dollar, and dollar are following a bank holiday schedule. On Thursday, we have medium impact for GBP at London Open. New York Open, we have dollar, CPI, and unemployment claims. 12:45 p.m. on Thursday, medium impact. We have a speaker and high impact speaker for dollar and GBP at 12:45. Then on Friday, core PPI for dollar and preliminary consumer sentiment for 11 a.m. dollar based, and noon on Friday we have another high impact speaker for GBP. So let's go over to the dollar index. All right, so I mentioned last week we were going to potentially see a run above a high and maybe shoot it down lower, take this low out here, and if it kept going, target this area down here. And I'm going to scrunch up so you can see again what I'm drawing your attention to. It's that small little fair value gap in the form of a BISI, buy side imbalance, sell side inefficiency, right there. Okay, and we talked about this before, so it's in your notes. It should be in your notes, and it should be in your charts as well, following along. On the daily, it looks as if this low is still likely be tagged. I mentioned if we trade below here, I don't think it's going to go down there and go higher and reverse to go, on a long-term basis. So while we did get a run up initially, it didn't break anything on this high. It just ran up, took the buy side liquidity out here, bearish order block, and then now we're back below here again, and all of the liquidity rests below here. So we're probably going to have a gap, and it's probably going to gap lower. So my objective is how we trade here. And on a longer term, if we trade through this and then come back up into this area, that's going to be a balanced price range, and it should act as your idea of support, broken term resistance. That's how that stuff works. So if it trades below this and comes back up into it, it will have balanced the buy side imbalance with sell side, but it has to trade through it. Like if it gaps down below it, which it can, don't be surprised if it does that. But if it trades through it, that's better to trade back up to it. But if it gaps down below it and trades up into it, then it needs to trade back down again, leave it, then come back to it. That would create the balanced price range macro for the dollar to follow for lower prices. I'm bearish on dollar. I think that the dollar is going to go lower. Longer term, at the turn of the year in January, that might change, because if things switch in regards to the Senate, with the Senate runoff in January, I'll have to revisit that. But right now I'm looking at a lower dollar. All right, so drop into an hourly chart. I don't want to spend too much time, as I mentioned. This would be a brief one, and I'm genuinely going to try to make it brief. I know I've said it many times in the past. Okay, it's going to be a short one. It turns into an all-nighter. But I like the idea how we've traded in here. We worked into this low here, traded into it, and rejected the SIBI, sell sign of balance, buy sign of inefficiency. Nicely traded there and came back up into it one more time. Consequent encroachment here, breaks down, fair value gap, another return to it, optimal trade entry, breaks lower, bearish order block, overshoots the fair value gap, and that's fine. Aggressive run lower, imbalance, retrades, rebalance, bearish order block, and breaks lower. I don't want to see dollar open bullishly. Okay, so let me say this. I should have mentioned it on the daily chart, but it just came to me. If it gaps open higher on dollar, I would like to see it trade lower, fill the gap, rally, and fail, and then break below it, and then that gap will act as resistance, like a fair value gap being retraded to in the form of a balanced price range. Okay, so in other words, every gap, whether higher or lower, we want to see it trade through it, rebalance it, and then respect it as a balanced price range. Okay, but I don't want to see a gap opening. If I'm going to be honest with you, I'd rather see it gap lower, make an attempt to fill the gap, but leave it open. It's partially. That means it's a breakaway gap, and dollar could be trading down into 89s or so over the next coming weeks or something like that. And I'll stay with that narrative until proven otherwise. On a 15-minute time frame, okay, you can see real nice reaction at that old low. Small little fair value gap, trades to it, and wants to go lower here on the close. A lot of uncertainty going into the weekend, and that's the reason why I said I wanted to see how we traded through the entire week, because I mentioned also that we would probably not get the announcement as to who actually won the election, and I don't believe we have it yet. The media has done this before. They're slanted. They're clearly left-leaning, and we've seen it also in the past where they have said, hey, look, we have a winner, and then they had to pull it back. And all right, so here's the euro dollar daily chart, and let's zoom in here. And honestly, this is the first time I've looked at the charts. I've been following all of the election narrative all this week, trying to get a read on that and then how they might use certain things this week and the coming weeks going into the end of the year. This is that bearish breaker. It worked on that, traded lower, took sell side liquidity out here and here. And then I mentioned that we would potentially see a run midpoint of the breaker in here. So it'd be a consequent encroachment of this run if we had it on Thursday, which it was a bullish run. And we opened, traded down from the open to the high of that candle, consequent encroachment, rallies. We're inside of a bullish breaker, so we're going to take this off. This has already done its job. So if the dollar does go lower, that would obviously allow for euro dollar to trade higher, and its opposite opposing premium array that we outlined on the dollar, that lower buy sign of balance, sell sign of inefficiency on the daily chart for the dollar. This is the opposing premium array for the euro dollar, and I'll scrunch this up so you can see it. And I apologize if you hear my stomach gurgling. I had breakfast and I've been doing the edit tab, so every time you hear me do this, okay, when you hear me do that, I'm actually making a notation in the recording. So when I do my edits, either I have my dogs barking in the background, or my son knocks on the door, or something to that effect. And I've done about 30 of them so far during this recording, and I'm just gonna let it happen. So again, it's my breakfast digesting, and if it's annoying you, I'm sorry, but I'm not going to have this many edit points in the video. So we have a sell side imbalance, buy side inefficiency here in the form of a fair value gap. I think that's what we're probably going to reach for, and it would take out liquidity resting above here. Anything above that, we start stepping into here. We have a really small one in here, and that will be interesting to see if we can get all the way back up into there. Not just simply because of that, but I want you to see if we do trade the 122s, that would be an area I like that, and you'll get a point of rebalancing to the smallest detail, even if it goes just to that level there. And it's all, sometimes that's all it needs to do. But I'm bullish on euro. I think that we have taken out sell side liquidity here and here. We moved higher. The problem we may encounter is the initial opening gap risk. Okay, so that gap risk when we open later today, right now it is 11:18 a.m. New York Standard Time. So if we gap, that initial volatility, and it might not happen. We might not get a gap opening. I'd like to see it gap opening though, because that would really push sentiment out of whack and get traders thinking, oh no, I'm offside, or my idea is wrong, and then they would do like the casino. Well, if it's not coming up black, let me bet on red, or vice versa. So that's the kind of scenario I'm looking for. I want them to really get people caught off guard with a gap opening. But if this opens near unchanged, then I'm still siding with what I'm looking for, but it's just better if it gaps in our favor. Okay, so looking for higher prices on euro. Okay, and here we have the hourly chart on euro. And I mentioned last midweek review, we were right in here, I said that we were bullish, and we do have breaker scenario, and we also have this level in here, which we'll look at a 15-minute time frame. If you extend that out in time, that fair value gap we will find on the 15-minute time frame. I mentioned that if we trade above fair value gaps and it acts as a balanced price range, the high of a bullish fair value gap or the consequent encroachment of that level is ideal scenarios to anticipate a bullish buy setup. And you can see that occurring in here, and price rallied up into this area, and then we still have all the way up there. Okay, so that should give you an idea what should draw price up to those 120.30 to 120.65. I like 120.50 mid-figure to just use that right now, but we'll see how we open and how we trade from the opening later today. 15-minute time frame on euro dollar. Nice consolidation, rallied up, small little imbalance here. All of this back and forth. Okay, all of that is balanced until we get this small little gap here, that fair value gap, right above, as we ran above this old high. So this rebalance, forget the tails and the wicks again, that's always going to be broker level. So just don't be concerned about that. For now, while you're learning, just know that the bodies of the candles are respecting this little gap right in here, taking out sell side liquidity and then rallying. We left relative equal highs, drifting into the close. Not much of an exciting close on Friday, but I expect this week to be a little bit more volatile. Higher prices still expected. Let's go out to the daily and go to pound dollar. And here we are. And I mentioned I did not want to be short this currency. I don't like the idea of shorting it. I think cable is going to try to press aggressively higher. And I think the move that I've been looking for might start this week, where we aggressively run above this high. Now, it doesn't mean open the floodgates and start buying cable. I still am very apprehensive in this climate, because I posted a picture of a black swan, and I put it on my community tab, and I said, see it now? And what I meant by that, and this is the only time a rant or tinfoil hat thing I'm going to include in the video, that image is pointing to the cause and effect. The cause is the election being rigged. I believe it is rigged, and if you don't believe that that's the case, I'm not interested in going back and forth in emails. I haven't had anybody email me that I know of trying to oppose that view. And if you do send it to me, I'm just going to ignore it, okay? Because I don't have time to do all that. I believe what I believe, and if I'm proven wrong by the courts, then that's fine, and I'll accept, whatever the President Biden, administration brings. But the Black Swan event is really now set in motion because of that election. And if it comes out, or they realize, they being the Democratic Party and the left, if they determine that Trump has the goods, the real evidence that will expose them, then I anticipate a September 11th type event, because they're going to need something really big to distract people and scare the living hell out of them, to get their eyes off of what everybody in this country sees. And I honestly believe there's a lot of Democrats that see it and they're just going with it because they can't stand Trump. So even if it's by crookedness, it gets them out. They're okay with that. And I have a problem with that. Not because I like Trump, but because I respect the office of the presidency. So the Black Swan event can pop off at any time, but I think the real trigger is if we have evidence that points to real voter fraud. This would expose a lot of people. Okay, and think about all of the celebrities that have stepped out and said, congratulations, Biden, to all the world leaders that come out and said, congratulations. To me, I just think that those individuals are also in this network of corruption. And that's my personal opinion. Okay, and again, I'm not here to try to force it on you, but I'm answering questions as I talk. So that way, if anything pops up by my post on the YouTube channel and your membership here, I don't want you to have to email me to get what I mean by that Black Swan picture and what I mean by all these other things. So I believe that we will see something bad, like really bad. I mentioned that we had something wicked coming. And we obviously, half of America sees it, and maybe a lot of other people around the world see it. But if we have an event, it's going to be worse than September 11th. It has to be, because there's too many people wrapped up in all this, and they're in high seats. So that's what I mean by being prepared. I don't believe people are going to get sick and die. I don't believe people are going to go into the hospitals and need to be on ventilators. Okay. I have friends that have spouses that died 10 years ago and they voted. So save all of that stuff that you think this is rigged, it's fake, and they're making up a story to justify Trump losing. I know this stuff for a fact. Okay. I know people. It's not me hearsay. I have friends that literally were told here, use this Sharpie, and their ballots were not accepted. It was rejected, and they just put it and slid it in the thing, and it's done. And then all these other people are coming out and they're giving the same testimony about it in video. So again, I'm not here to push Trump, because I don't like him. I'm not here to beat up on Biden because of the man Biden. I'm against his policies and the Democratic policies. So I'm outside objectively looking at it, and that's what I meant earlier on my YouTube comment. I just don't think that people are prepared to see the levels of which these corrupt politicians, and here's the rub, it's not just the Democrats. It's not. There are Republicans wrapped up in all this. Okay, and if it comes out, you're going to find that the majority of them are all screwy. Okay, and we don't have that perception largely as a country, but it's becoming more apparent that we see it for what it really is. And it's not just America, it's every other country. They're all corrupt. They're drunk on power, and they don't want to lose it, and they're going to do whatever they can to keep it and gain more of it. So there isn't going to be a COVID 2021 part 2, the revenge, the advanced level bacteria, whatever it is that they're trying to call it. I've never been one that said that people are going to get sick and that was going to be the problem. It's always been the economic fallout to justify the screw job on the election. And if you go back and listen to all my recordings about it, and that's what it is. I never said people were going to get sick. I think that's always been the smokescreen. But the real black swan event is going to be, it's going to be on U.S. soil, because they need to scare the living hell out of every American of what took place and what might happen again. Okay. And I think the worst, think the worst. Okay. Like imagine, if you will, a small tactical nuke going off anywhere in the U.S. Man, like they could say this country did that, that country did that, and right away we're in a war. And guess what? This stuff is going to be taking the back seat, and the media will only be talking about the war or the attack, the new September 11th attack. It won't be COVID, because everybody else we're all bored of it now. People aren't dropping dead, walking around like we saw in China. We didn't see any of those things in hospitals. I have family members that are nurses. They were laid off. Bottom line is they were not overrun with COVID. Okay, they weren't. And it has nothing to do with political. I'm not giving you a political slant. I'm giving you the facts. You don't have to believe it. You don't have to believe me. Okay, dig into it yourself. Talk to people. I have family members that are doing it, that were sent home because they're not busy. Our hospitals are overridden. This was all a ruse to get people to show up for the vote. That's it. That's all it is. And we're moving fastly to global government, and the United Nations is preparing themselves for their leadership. And that's why they're trying to do the defunding of the police, because it's not that Republicans can stand on the sidelines and heckle Democrats and say, oh yeah, who are you going to call when rapists come into your house and destroy your house and take your wife and children, because they're going to take the guns from you and they're going to defund the police. So who are you going to call? Oh, there's going to be a police. There's going to be a police force. It just isn't going to be our local police force. It's going to be United Nations police force. And they don't have to follow a constitution. Okay, so that's where I see this all going. And you probably thinking, man, this is a huge leap. That's really conspiracy theory. Well, all you got to do is just look at the trends. For the last 2 decades, we are really jumping really closer to that more than ever in the last 4 years. We're doing it. Whether you like it or not, we're doing it. And take a look at Australia. There's a lot of things going on in Australia that are surprising, really surprising. And they had the right for their firearms ownership taken away, and there's some things going on down there. I think they're doing a dry run on the United Nations movement, on how they're going to seek control over nations' sovereignty. They're not going to have it. So what I mean by that, they're not going to have it. The United Nations are not interested in seeing a United States of America operating as they have, as an independent sovereign nation. So no one can defeat us militarily. So they have to come inside, like an infection and a virus, okay, in a computer virus sense, and corrupt us internally. And that's what they have done. And it's completely eroding all of the values and statues that we've built that made America great. And we are losing that quickly. And all of that is at risk right now. And trading is going to be affected by this. And it doesn't matter if you're an American or not American. You need to hear these things and weigh this stuff out, because it's going to impact the markets. Period. End of story. Done. The euro, the Bund, okay, their bond is going to be affected by what goes on in our country. You guys sit over there and you're in Germany and say, well, this doesn't really affect me. ICT, I'm not American. I had an email from one of the members here. Why are you talking about this? I shouldn't have to listen to this. Well, here's what you need to consider. When the markets start gyrating and you're thinking that this is broken now and IPTA isn't working, I'm telling you that IPTA will be firing on all cylinders in those environments. But there's going to be periods where there's a manual override where they go in and real people are sending price to different levels to upset everything. But they are brief. They're very momentary like that, and then the shock waves they let pan out. But that part is algorithmic. The manual override that takes place is momentary. It's a very brief moment where it's repriced maybe 1 to 2 price points immediately, not gradual. It's like 1, 2, and it could be hundreds of pips, which is really just pennies. It's just pennies. But because everyone over leverages so much, those pennies are humongous moves. And you should not be fearing IPTA not working. And I got another email from someone that said that if I say that IPTA will never be reprogrammed or to the effect that it won't ever fail, then why am I cautious in this environment? Because of what I just said here and what I've said in the past. The times that you're going to be wrong is when there are manual interventions where a person goes in at the central bank level and says the price is going to be here right now, and it can skip from wherever it is trading right now to that price immediately. There's no trading between those 2 price points. For instance, what I mean by that is this. If you look at this candle here, the close is 1.3159 and 9 pipettes. What happens if euro gaps to 13400 right at the open on Sunday? Where were the trades between the price that it closed out on Friday and that 1.3400 opening price? There is no trading there. That's repricing. That's what can happen. Those types of things can, I'm not saying that's what's going to happen, but I'm saying in illustrative example, that's what I mean by repricing. IPTA does not do that. Okay? That is always a man, person, woman, whatever. It's a human being that is doing that repricing. The algorithm does not do that. And that does not indicate or say or illustrate that IPTA is broken. It just means that there are people that are overriding what the normal macros would be doing in the algorithm. They're doing something drastic. And that is either meant to disrupt or inspire new interest in a currency or a market. Okay? So I believe that cable, British pound versus US dollar, will start to gravitate towards this high here. And I think it will probably do so more aggressively than euro dollar will. So I think it'll be more exaggerated in pound. And it may not really reflect its strength in the currency pair of euro pound. So in other words, in normal situations, we would use euro pound, and euro pound should be consolidating or going lower for this type of environment that I'm outlining for cable. But because of the nature of the climate that we're in right now, where some of the rules are basically going out the window because of a black swan event climate that we could anticipate, we see the season right now. Like anything can happen, anything. And when it happens, it's going to send these markets to levels that most people aren't prepared for. And I think that in usual periods of uncertainty, the dollar tends to go up because it's a flight to quality. Okay, it's a risk-off scenario. And I think that the central banks are going to take advantage of that and use it as a catalyst to send dollar lower, and foreign currencies will be allowed to trade higher. And cable, and you've been hearing me talk about this for a month now, I'm expecting this currency to do a real shafting on anyone that wants to sell short. So that's why I don't want to sell it. I don't want to sell this currency, because I think it probably will be the one that has this big move to the upside, and it's going to hurt a lot of people. And it's going to be people looking at this old high here. If it trades to that, they're going to say, well, it went down there before, and they're going to try to sell it there. And I think that's going to be a mistake if it gets there too. I think it's going to just ram right through it. What it does when it gets above old highs, and those old relative equal highs, remains to be seen. But I don't want to be selling short cable. All right, moving to the hourly chart. Okay, we don't really have a whole lot of imbalance in here. We have a small one right there. Does it need to do that? I don't think so, because we've already worked the breaker here. So we have a low, lower low, the high in between, last up close candle. See that trading here, mean threshold, last up close candle. And once at least from where we're seeing it right now, it wants to go higher, and from my interpretation of it. But we have that opening gap risk on Sunday. So the gap risk is the outlier. We don't know if we're going to see higher gap opening, lower gap opening, or relatively unchanged. So a relatively unchanged opening for any of these markets is an indication of uncertainty. That means the central banks are not yet willing to make an intervention, and they're not trying to reprice aggressively anyway, higher or lower. But a gap opening, higher or lower, gives us something to work with from a narrative standpoint. And I've already outlined that relative to the dollar. And 15-minute time frame, you can see we had a nice consolidation in here. And if we start to move higher, I would welcome that run to the old daily high as I was looking for. Now, I'm not saying it's going to happen in this week, but that's what I'm aiming for, unless something completely blitzes this outlook. And if it does, then I'll obviously make a mention of it in the forum and refer to it on the community tab so you guys can see it. But every commentary thread, when I create a new month, like right now we're in November 2020, you should be subscribing to that, because I will use that thread to highlight anything new that would change between our midweek and week ending commentaries. So that way you'll get an alert saying, hey, look, there's a new message from ICT in this thread. All right, so last bit of business. Let's take a look at, lastly, let's take a look at E-mini S&P. All right, so I mentioned that I was looking for the reaction between midnight and 1 o'clock in the morning, the day of or the day after on the election, because I thought we would probably get an announcement the day after, but they kept it going longer. Now, on Saturday, they have posted, the media rather, not the Electoral College that actually determines the real president. The media has been pumping that Biden has won. And if you look at the numbers, then yes, you would have to conclude that by the numbers, it looks like Biden has won, but it's being contested, so we can't say anything, and there's time. But because that has been announced, I'm looking for this scenario here. Okay, so when we open, that's why I'm expecting this big gap scenario, because we're opening the week on Sunday. If we open relatively unchanged, look for this scenario tonight going into Monday morning, midnight to 1 o'clock in the morning, because then we might see this wild whipsaw. I don't believe the stock market is welcoming, or that it has already priced in, a Biden election. Okay, so I believe that there is strong interest to get back above this high. I don't believe Biden winning puts us there. Okay, I'm really interested in seeing how SPOOs open up this week, with the media pushing Biden as the winner. If we go higher, with Biden being announced through the media and everybody else pumping it now too, I'm highly suspecting this high being a fake break and then retrace, go lower aggressively. In other words, turtle soup short under Biden. Okay, the market does not like the things that Biden wants to do during his campaign. The things he says he wants to do will be detrimental to the longevity of the bullishness in stocks. There will be some reckoning, and it won't be a bullish market. The equities market will tumble on the confirmation of Biden. Okay, so the date that the Electoral College announces the presidency and the winner of the presidency, that day also you want to be looking at that midnight to 1 o'clock in the morning, because when it changes to a new day starts, they're going to clean the board. They have not done that yet. That's my point in saying all this. They haven't done it yet. It wasn't like, oh, ICT was wrong. It hasn't formed yet. It needs to come, as I mentioned. It needs to come after they announce the winner. They didn't announce the winner in a confirmation from the Electoral College. It came by way of the media. But that is being perceived by the world, okay? And they're doing their kumbaya in the streets where I thought COVID was a problem. There's no problem. There's no talk about COVID now. But they're in the streets dancing around, and it's going to be unbelievably upsetting if Trump does, and I don't know if he does, but if he does have evidence and proves that there is widespread voter fraud and they turn the election back to Trump, it's just going to be insane. That will cause the stock market to rally like you've never seen. Like, we're probably going to see like a 2,000 point, 2,500 point, week, or it may even do it in a day. Like, it would be crazy not to anticipate some wild bullishness on the S&P and the Dow and the NASDAQ. But I don't believe we'll see that bullishness under a Biden confirmation. I don't see that at all. I see a struggling stock market. I see a gridlocked political front on the U.S. The Senate, if it's still being led by Republican, they will stymie every policy that Biden administration wants to, drive through. So we will see basically a nothing burger, a lot of partisan sparring, this one and that one, and it's just nothing changes. So I'm watching S&P also, how we open this week, and I'm going to take a look at bonds, ZB20, and after this we'll take a look at gold real quick. All right, so here's the bond market on an hourly chart. Let's go out to a daily. All right, so even though we're really elevated on bonds, I would expect the bond market to try to make an attempt to go higher. Right in here we have some buy side, so that might be something to watch and study this week. There we are there. And we did essentially come down into this last down close candle, potential order block. BISI's basically been rebalanced, and we'll see if it wants to rally up there. But again, opening gap risk, that sets the tone and the narrative for the week. So refer to what I mentioned on the dollar and how all that relates to all these other markets. And the last bit of business, gold. I haven't talked about that in a while. All right, so here is the gold market. I think that we took out the sell side liquidity here. We traded down into the order block here. Sell side's taken. We're above the buy side, but I think that there is at least this little area right up in here, even if we don't make a higher high in gold until next year. Okay, say it just stays in a range. I like the idea of trading up to here, and it could do that literally this week into next. Like, it could do that because of the narrative they're pushing that Biden has won. If we start seeing things happening like there's a lot of talk about how the truck drivers in America are going to go on strike. Now, this is all hearsay. I don't know this for a fact. I'm just passing on what I've heard over the week. They're planning on doing a strike, and they're not going to be doing deliveries into the Democratic states. To me, I think personally that isn't that big of a deal, because there's a lot of truck drivers that have lost their job, and it's very easy for them to put a Democrat driver in those seats. Now, but I want you to just think about the motive of why they're doing it. They're ticked off. And if the Republicans that are really offended by what they are seeing get to the point where they no longer feel that they have a voice, and they feel browbeaten, and maybe they're waiting on a stimulus that hasn't come to their aid. Irrational thoughts and actions come from stressful situations. And while we may not be feeling that, and maybe some of you are feeling those types of things, it's more likely that as time goes on, if they keep basically rubbing in their nose in this whole business of Trump got evicted, he was fired, whatever they're doing to set the write-off. Yeah, we're all human. And while generally Republicans don't go out and burn their own cities down, they are human still, and pushed enough, tormented enough, without any hope. Some still could do things that you wouldn't reasonably expect from them. And I think that's what this climate is trying to cultivate. They're trying to whip people up into this frenzy to make them hate their neighbor and go out and do terrible things. And all of that type of stuff, cities burning, riots and all that stuff, it's coming. And what party it does start with doesn't make a difference, because once it starts, it's going to really kick off, and then gold is going to blast off. I'm confident that we'll probably see 3,000 gold. It may not be in 2020. It could. I'm not saying it can't. I believe it can if the right environment starts, and an incendiary device like a Trump reversal and the election goes to him. That's going to start a landslide of violence in every cities, everywhere. Every state is going to have an issue, and that would send gold parabolic higher, like crazy. 3,000, 4,000, 5,000 gold. I'm not saying that's the case until we get that environment, and we might not. I might be wrong. It might not even happen. Joe Biden might be confirmed, and we just have a sloppy political climate that really sees nothing really change in America, and that wouldn't really cause gold to do anything. All right, so I've answered my email bag for gold, at least up to the point on the emails at that time. And I'm not stating at any capacity of being caught up on emails. I haven't done a dent in anywhere near what I need to do for emails. It's too many of you. I don't usually do this, but I'll talk about it in brief. Bitcoin. All right, so let me zoom out here a little bit. Do not ask me to keep doing this, okay? I'm only doing it because I mentioned it the other day. All right, so here is Bitcoin, old high. Work with me here, kid. Come on here. All right, so we have 19.6. I'm not sure if that's even the real price. Let's see here. The high is, it's showing 19,666. That's interesting. All right, so if we look at how we have traded, I mentioned last week, I said, imagine having Bitcoin greater than 20,000 before Christmas. And that day, we were down in here, and then it violently rallied, came back down, rebalanced essentially 95% of that, and now we're sitting here. I am not a crypto guy. Okay, I want you to know this going into this discussion here, and it's going to be really brief. I'm not claiming to know with a great assurity that Bitcoin's going to go above 20, but if it ever was going to, okay, if it was ever going to shine and show its glitter, its value as an investment vehicle that's going to be exceedingly higher than where we've seen it trade in 2017, then it will do so now. And it should make short order of 20,000. And then if it goes above 20,000, it's probably going to have a initial fake, like it wants to go lower, and people are going to look at that 20,000 like it's resistance. But then when it goes above it again, and this is what I would expect. I'm not saying I'm right, because crypto is a little bit different from me, even though a lot of you say, oh, it does the same things. I don't see the same things that the markets I follow give me that you don't know yet. So because of that, I don't trust this asset class. There are times when I think it will move, and it will move. But there's many times I would expect it to move, and it doesn't move at all, or goes the opposite direction. And because of that, I don't have confidence in it. So the things that I use for other markets aren't in this asset class yet, but they're slowly becoming apparent over time. Like if I look at this versus what I saw it in 2015, then yeah, there's definitely a difference. There's a definite difference between where it was at then when they first started asking me about it, and I was like, I'm not interested. That's what I mean when I say I'm not interested, because there are certain signatures that needs to be present in price action, or I'm not interested in worrying with it or looking at it or studying it, because it's not going to follow the protocols that I have in place for the asset classes that I follow. And you can argue and say, well, you're stupid, you're missing these big opportunities, just buy it and hold it forever. I can do anything that this Bitcoin has done. Okay, I can do 10,000 times better than that over a career, consistently and never doubting what I'm doing, versus trying to win the lottery in this. So I want you to understand and balance what I'm about to say. Okay, I believe that if Bitcoin does go up, and it should be going up right now, with everything that's going on right now, Bitcoin should be going up. If it's what it's supposed to be, it should be rallying. And it is, that's fine, but it needs to continue. And it needs to do so in big candles. It needs to breach 20,000, give back a little bit, like they're going to treat it like a resistance, and then vault through it and just leave like Elvis left the building. Like it needs to just start gapping 1,500 points, 1,000, let everybody fall back in love with it. And this thing could potentially hit 35, 40,000 in really short time, because it will have endured all of the negativity. I mean, I even said it was going to go to 100 just to get people off my back, because I don't know this currency. I don't know this market. I don't know it. So to keep people from looking at me like a hero, I was willing to be the villain in it. Like, I don't know what it's going to do, so I'm just going to co-sign and say it's going to 100. If I'm wrong, did I lose anything? No, because you all know I'm not a crypto guy. But if it starts trading like I just mentioned here, then there's going to be a lot of institutional sponsorship when it starts to do that. And then those signatures it doesn't happen like it's been gradually going on, because I think they're building in some ownership of it. Okay, I guess that's a lack of a better word I can't reach for, but that's basically what I'm thinking of, is the banks are getting a good handle of this. Okay, there will be new currencies, yeah, but while this one's around and not been replaced by something else, which I do believe is going to happen later on, they're going to be more apparent, and their signatures will be there. Like their fingerprints will be on moves that I'll be able to see it. But right now, I'm watching it like a hawk, because I believe if it's going to happen, it's right now. Like it's going to happen before Christmas, and everything I just outlined, that should transpire. But if it doesn't, then you'll understand why I'm not in love with it. I don't care for it. I'm just not convinced. I don't believe that this is the last bastion of getting rich quick. Okay, if that's what it means in terms of putting it bluntly. There are always big moves every year. Every year there's big moves. I outlined the euro dollar, this entire move from the low all the way up to where we're at now. That is a millionaire maker. Once you understand what you're doing, you can make $1 million plus in that type of move. Okay, you can do that. It requires equity. It requires focus. It requires discipline. And you watched me outline that thing the whole year. That is like a quote unquote mega move. That's a quarterly move, a quarterly shift. Every 3 months or so, we're looking back the last 3 months. And a lot of you folks that just got to month 5, you're like freaking out because you're like, I got all this information and I'm paralyzed now. Well, that's normal. That's a normal thing. But to make it very easy for you, when we're looking at quarterly shifts or the IPTA data ranges, all you're doing is looking at, okay, today's a new trading day. So count that day, look backwards, 60 days. That's roughly the last 3 months, last 3 trading months. Okay. So you're not looking at weekend days. You're not looking at Sundays. We're looking at Monday through Friday. And you're trying to interpret what the price is going to do based on the last 3 months, because that last 3 months has a range that it's built and has, or it trades outside of and creates all-time highs or all-time new lows, something to that effect. And you have to use other tools. But in that last 3 months range is all you ever need. And then if you look at the last 40 days trading range, many times you're going to find a lot of really sweet swing trades and short-term trades. But you can make a career out of the last 20 days. You can do all your day trading, your one-shot, one kills, okay, in short-term trades in the last 20 days trading. Where's the range in the last 20 days? And you guys are overcomplicating it. If you just listen to how I talked about it, you're just simply looking at a rough period of time. And how far do you look back, Michael? 3 months. That's the range that I can work within, and I don't need to know what it did 5 years ago. I don't need to know what it did 2.5 years ago. I don't need to know what it did a year ago. I just need to know what did it do the last 20 days, the last 40 days, and the last 60 days. And I can find a PD array in that and work with it. It'll give me a target. It'll give me a setup, or it'll tell me right now it's not something to worry with. There's a better range to operate in on another market. And that's the benefit. That's the only real benefit of these quarterly moves and the up-to-data ranges. Okay, when do things expire from a PDA standpoint? What order blocks would I be more focused in? Am I more interested in an order block a year and a half ago, or one that is 60 days or 20 days? The one at 20 days, because it's most recent, and they're going to gravitate. The algorithm is going to gravitate to that 20-day PD array easier and faster than it's going to be to a 60-day IPTA data range. It's just common sense. All we're doing is working with an element of time. You have been focusing on the price elements, and that's fine, but you have to work within the narrative of that 60, 40, 20. And the 20 is the most sensitive. 40 is still very sensitive, but less sensitive than 20. And 60 is less sensitive than the last 20 days. Whatever the highest high and lowest low in the last 20 days, that is your most dynamic range. And you're going to be able to find highly probable, most powerful trades are going to operate in that 20-day IPTA data range. And that's why I give you very short time frame examples, and I ask you, what do you see? And initially, when you're new under my wing, you think it's not enough data, because you're trained to look at a weekly chart and you need to see 3, 15, 40 times a level being touched as a result of support and resistance from a classic standpoint. I don't require that, and you don't require that, because the algorithm doesn't even care about it. The algorithm doesn't look back and say, okay, how many times did this level get touched in the last 15 years? It doesn't do that. It looks at 20 days, 40 days, and 60 days, period. And that's why you've been taught that, okay? And all that is focusing on the potential intermediate terms, highs and lows in the marketplace that will create mega trades, okay? These big, extrapolated, long, drawn-out moves like I outlined on Euro this year. That was using IPTA data ranges. That was using quarterly shifts. That was also trading against the narrative and the ideas that the retail crowd will say. Dollar has a higher interest rate than Euro, so I don't want to buy Euro. I want to sell short Euro, and I will get the carry trade interest. Well, congratulations. That didn't work for you. If that's what you were thinking, and there's a lot of retail people I can take you and link you to right on YouTube, and they're beating their chests how smart they are. And Euro just went up and up and up and up and up. And we called all that. I outlined it from the beginning all the way to where we are now. So don't think that you need to have Bitcoin. I'm thinking to myself, this is going to be a short video. Yeah, it never fails, right? I need to come in and say, okay, I'm going to make a long video. This is going to be a long video, folks, and it'll probably be a lot shorter. But don't think that Bitcoin or crypto is that, that casino time, short, fast run to affluent lifestyle. Okay, because you don't need that. You just need to learn how to trade, read price action, and you will find mega moves every single calendar year. They happen all the time. All the time. I gave you guys soybeans this year in a commodity market. Boom, $10,000 per contract. That's a mega move. And you're probably thinking, well, crypto went from a couple hundred to 20,000. It doesn't compare. Okay, so did you trade from $500 all the way up to 20,000 or just below 20,000 and get out? Because I haven't seen anybody do that. Nobody's came out and said, I've done that. Now, you're hearing a lot of stories about this and that, and I don't know anybody. I'm just saying I haven't seen it. I see a lot of people saying, I wish I would have got out. And my nephew was one of them. I told him to get out right when we were at 19.5. I said, please trust me, get out of it. Because everybody, even my wife, was talking about buying, Bitcoin. Asking me, do you trade Bitcoin? Why'd you ask that? Well, it's going up. Oh, it is? And I went right on the Twitter. I said, okay, that's it. It's time to get out of Bitcoin. And this is the reason why. My wife's sitting next to me on the couch, literally right next to me right now, and asked me if I was buying Bitcoin because she said it's going up. So if my wife, just because she's the wife of ICT, does not make her a oracle, it does not make her the in the know crowd. Okay. It just means that she carries my last name and she is my life partner, the mother of my children. When it comes to trading or technical analysis, if she says something's going up, it's not going up. That's the last bit of the sentiment indicator that anybody would use for polling someone. Is Bitcoin bullish or bearish? Okay, she's the last one in the line that would know that. So if she has an opinion about it, and women, please don't be offended to this because I'm not trying to belittle my wife. I'm just drawing on the reality of things, the gravity of if her opinion of Bitcoin's going up because she sees everybody else talking about how it's going up, then that means everybody is of the opinion that it's going to go up. And that's exactly the day before it made its high. I said that day it's not going to 20,000. It's going to go to 6,000, and it went to 6,000. And then ultimately I said it's going to go to 3. It didn't quite get down to 3. I think like 3,200, I think it was. And then now we're here. So on Twitter, I had a couple different times where I called different moves, and I did some Ripple moves. I called the high-end Ripple, and that's it. Now, what you don't know, but I'm very candid about, I'm more wrong in my personal studies about this asset class as a whole than anything. Like if I look at it every week, which I don't anymore, but I did for a while back in 2017, 2018. I was looking at it almost on a weekly basis. And the things I was expecting to see happen were failing. So it wasn't inspiring my interest to continue doing anything with it. So because of that, I was not willing to talk about it. But I stayed true to Forex, and you guys know the history of that. I'm pretty good with that. And S&P I'm pretty good with, and commodities I'm pretty good with. But this asset class, if it does the things I outlined, saying if it goes above 20, rejects, gives them a false idea that it's going to crash at just a break above 20, but then rallies through it again, man, this thing will be, it's going to draw everybody's money. Everything will pour into this. And what you thought you missed on the beginning and, that big run up going in 2017, it's going to make that same type of move and more in less than half the time. It'll be very, very aggressive. And it could go into the stratosphere. Like it could really do that because it has weathered a lot of negativity. And people will be looking for anything that can stand against what we're seeing right now, which is uncertainty everywhere. So if you're a crypto person, that should be inspiring for you, but it should also be sprinkled with a measure of objectivity. I am not that good in crypto, but my interests would be more aligned with it if it does something like that. And I don't think going above 20 and it starts